morning to all of you. I This is the video. I was supposed to drop this video with you guys yesterday as a continuation of our class, but then I couldn't. I didn't quickly record it and drop it with you. Now we started talking about the reversal candlesticks, and then we are talking about doji, and we said we have 5 variation of doji. We have the common doji, we have the long-legged doji, we have the gravestone doji, we have the dragonfly doji, and we have the 4 price. All of them I've explained to you in detail. Some of you have not submitted your assignment. Make sure you submit. So you'll be having another assignment today, and make sure you submit everything within 24 hours. Okay. So now don't forget the general rules to reversal candlesticks. Don't forget the general rules. So before you start looking for reversal candlestick, you should look for your area of interest. Very important. Look for area of interest. The dawn zones. Those are my zones. Those are the zones where my eyes are, where I gaze my eyes and want to see something happen, expecting a reaction, expecting, an entry at those zones. Those are your area of interest. So reversal candles are not useful except they are, we only pay attention to them when they are formed on our area of interest. So you will not just open your charts and just looking for any reversal candle, anyway. I remember a couple of years back, some guys traveled to where I was, and 3 guys traveled to where I was, lodged in an hotel, and they were supposed to spend 3 days with me. They were supposed to spend 3 days with me teaching them, how to trade, and I remember I got into reversal candle a day too. That's a couple of years back. I think the year 2020 or so, and I started teaching them. I remember we got to reversal candlesticks, and then we got to doji, and I spent a lot of time showing them doji on the chart, both on daily synthetic indices and normal currency pairs. And then as we were seeing doji, all the doji we were seeing, price was turning in a different direction. As we see the doji, price was turning in a different direction, and I like, so we were like, wow. See, honestly speaking, by the time I'm done with showing them doji on the chart, and then we're supposed to continue, don't forget I teach an handful of candlestick pattern, an handful of the reversal candlestick pattern. I just started with doji for crying out loud, and those guys stood up. They said, no boss, we are going right now. Doji is enough for us. Every time we see doji, we just take a trade, and I'm like, it's not enough now, come on, hold on. Honestly, they left me. They traveled back to their state, and that was it. Of course, we still met a later time, and then I touched them much further than where we started. But so I'm just trying to tell you the power of reversal candlesticks, especially when they are formed at your area of interest. So the higher the time frame, the stronger and the more reliable these reversal candlesticks are, because there are much, because the lower the time frame, the more the noise. Okay, if you see, I remember I was traveling somewhere sometimes, in the year past, and I was supposed to, enter a trade. It was on a Thursday, and I was trading one of these weird instrument, USD MXN. My goodness, that particular year. So as I was about to set out in the morning, I saw I think this armor, this pin bar on 4 hours time frame that particular year. It's been a long time now, So I said like, wow, 4 hours. I'm seeing a pin bar on 4 hours. My goodness, what am I supposed to do here? I'm supposed to try. So I entered that trade. And then while I was on the journey, I was looking at the chart. Do you know that on a Thursday, the price, see, my trade didn't enter profit until the following week, Tuesday. I'm telling you, Thursday, no profit, Friday. But I told myself, I'm not going to close it. This candlestick on 4-hour time frame, if you see it 10 times, I guarantee you 8 out of 10 times, if not 9 times, it's going to give you profit. It's going to go in your favor. It's going to show a reversal. I'm telling you, I saw it there. When I entered it, and it was on Tuesday, it started entering profit, and I was just climbing the just carrying the profit. I made a lot of money from that particular signal. But see, I'm trying to tell you that look, you see, the higher the time frame, the stronger the reversal candlesticks are. Okay, so if you see a reversal candlesticks on 1 hour, it's definitely stronger than the one you see on 15 minutes, much more reliable. So let's move further. So today we're going to be talking about the engulfing candlesticks. Engulfing candlesticks. There's something great about the engulfing candlesticks. You know, the engulfing itself is a confirmation, as far as I'm concerned. It's a confirmation on itself. You know, I told you when you see doji sometimes forms neutrality, forms indecision in the market. And if you're a conservative trader, you want to wait. You want to wait till your um till your till another candle is formed in that direction that you're expecting. Okay, so if I see a doji, if I see a gravestone doji, I may be expecting another bullish candle, a candle to actually close above the peak of the of the dragonfly doji. If the gravestone doji, I'm expecting, I may be looking forward to another bearish candle to close, probably below the tail the of the dragon of the gravestone doji. I'm expecting it that way. I'm expecting another candlestick to just close in that direction. I'm expecting a close, but then a bearish, a bullish, or an engulfing candle, it's a confirmation on its own. I don't wait for anything further to show me, before I enter trade. The moment I see a bullish engulfing candle or a bearish engulfing candle in the direction I'm expecting it, I enter my trade straight up, straight up. And so in bullish engulfing candle, we have in engulfing candles, we have bullish engulfing pattern, then we have bearish engulfing pattern. This reversal candlestick pattern has two candlesticks, okay, where the second candle completely engulfs the first. That's something you need to understand about the engulfing candle. So there are two candles. There is one, the second one is called the engulfing candle. It must completely engulf, it must overshadow, the first candle. So there's important points to note. Focus on the body of the candlesticks, the closing of the candlestick, not on the wick now. If close, let the focus be on the main body of the candlestick, not on the wicks. So the second point I need you to note is that the second candlestick must be longer and it must engulf the first. It must be longer. It must engulf the first candle. Note, you should look for bullish engulfing pattern on uptrend to buy. You should look for bullish engulfing pattern on uptrend, to buy. And then you should look for bearish engulfing pattern on downtrend to sell. Look for bearish engulfing pattern on downtrend to sell. So let's look at an example. Let's look at this diagram. I just got this diagram, online to just show you, what it looks like. Now look at this bullish engulfing pattern. The price has gotten to your area of interest. It was a bearish movement, and then the price is coming down to your area of interest, and the red candles have been forming, depending on your own choice of color. The red candle has been forming. All of a sudden, at that particular zone, you see a candle that closes above and completely engulfs the previous candle, the previous red candle. And so you see the bullish candle close above the previous candle open. So this is the previous candle open, and then this one closes. I mean, this is previous candle open. It's a bearish candle, so it opens here and closes at the lower price. And then a bullish engulfing candle opens and closes above the previous price open. It closes above this candle, and it closes far, and it completely engulfs it. It must engulf, it must cover it. Then the length of the bullish engulfing candle, the length of the bullish candle engulfs the previous red candle. The length engulfs it. You see, bullish candle opens high or lower than the previous candlestick close. It closes above it. Very, very interesting. You should watch out for bullish engulfing candle, at the exhaustion of a downtrend that signifies the beginning of an uptrend. Okay, it must always be at a support in an uptrend, support in an uptrend. It means when the market is going up and going up and going, it's forming a support and breaking the resistance, forming a support, and then at that support now, you draw your zone and you're expecting price to pull back down to that place to continue to move to the upside. I'll be waiting. If I see at that zone and I find a bullish engulfing candle forming there, that signifies that trend is about to go in the upside direction. The reverse is also to this the bearish engulfing pattern. You see, in an in a downtrend, you see the market has been going down, has been going down, and then it's forming, and then you see it's forming resistance, and price pull back to the resistance, and then you are looking at it to continue in the direction of the main trend, and then you enter a sell, and then you see, or a bearish candlestick is formed that closes below the open of the previous candle. Let's say what is a bearish candle opens at or above the previous candle still close. Okay, it opens here. It's supposed to open actually here, but sometimes if there's a gap up, let's say the price gap up or something, the gap, maybe a weekend gap or something, and then there's a gap up somewhere, and sometimes gap also happen during the week. So the gap up here, or it's normally supposed to open around here, and then the length of the bearish candle engulfs the previous green candle, so it comes down and engulfs it. Literally it engulfs, overshadow the previous candle at a resistance, and then the bearish candle closes below the previous candle sign, and then it must close below this open. It must be longer, it must engulf it very well, it must engulf it, and then it must close lower than this open. So let's look at an example here now. I actually did a screen grab of my screen, and I brought it here. Now look at this. The price got to this place, and then it became a resistance because it pulled back now. Then the price broke that resistance, and then rally back up, and then rally up here. It came down here and formed on this same zone and formed a bullish engulfing. A bullish engulfing is formed here, and then if you have taken this trade, you see, you put the bullish engulfing here, see how far the price came, and then come to think of it, price came down. In the future, price also came down again to the same zone, like this is one of the most interesting candles I ever find trading forex. This is like a pin bar here now, but let's leave that for another day. We have not treated that one in our class, and say price came back to that zone. This is the zone, this is the down zone, this is my area of interest, and the price rally back up like this. Then look at it in the future, the same zone, price came there. The same zone, price came there. This is one of the kind I'm still going to be teaching you. It's called the dark cloud cover, the dark cloud. This is another kind we're going to be treating. But see, for today, this is my area of interest. In the future, this is my area of interest. During that zone, the price keep respecting it, rejected it, and then it's coming to here now. It's getting rejected here again, and then here I see a bearish engulfing candle. The moment I see this at this zone, this bearish engulfing candle, but I don't have to think twice again. I enter a sell straight. Enter a sell straight, brother. Enter a sell straight. So I'm going to be entering my sell here. I'm going to be cashing out big time. And then you see here now you see a doji at this zone. You see a doji at this zone. At this doji now, I'm going to be waiting for a bearish candle that completely engulf the body of the doji, which is this candle. If I enter a trade there, at least I've like broken even before price come go to the opposite direction. Then let's look at this again. There's a zone here. Price got to this place, rejected, got to this place, rejected, got to this place, rejected, and then got to this place, rejected, and then price came to this place, and a doji is formed. Look at this doji, the one I taught you last week. This is the this is like a common doji. This is like a common doji. A common doji is here, and this candle, a common doji is formed here, and then I'm seeing a bearish engulfing candle. I'm seeing a bearish engulfing candle in this place. If I enter my trade here, if I enter a set trade here, the price came down and break down, with plenty pips. You can see here too, price rejected here, and also here now I'm seeing a bullish engulfing candle. This is a bullish engulfing candle. And at the formation of this candle, in relative to this zone, I don't have to think twice again. I enter my buy and then price go to the upside. This is very interesting. This is very, very interesting. So see, reversal candle they give you an entry. They give you a perfect, you know, early entry. I'm telling you, if you focus on this kind I'm teaching you, and this is how many kind of methods I've taught you doji, and doji we have 5 variation. I'm teaching you an engulfing candle. Today I'm going to continue again teaching you until I exhaust all the 20 candles I plan to teach you. Okay, so please pay attention. And if I go to my next slide, it's going to be giving you assignment. Use any chart of your choice. Show me 6 places each where bullish engulfing and bearish engulfing signal entry. Okay, using any chart of your choice, show me 6 places each where bullish engulfing and bearish engulfing candles are formed. So let me quickly show you a live chart. Let me show you a live chart here. Let me show you. Okay, let me show you a live chart here, and I'm going to be showing you 3 uh, places that I've already marked out to use to buttress my points. Okay, so let's begin from here. Let's begin from. I've drawn my trend line. The price has been selling. I've drawn my trend line. Draw my trend line from here, and then I have this place to be my uh my point one. I have my point one here. Don't forget that when it comes to trend line, you are looking at 3 points. Then you have my point two here. I have my point two at this place, and then my area of interest is here. This is my area of interest. My area of interest is here. And then on this place right now, I'm seeing a bearish engulfing candle. The price is pulling back to the zone, to the down zone. And then all of a sudden, I'm seeing a bearish reversal candle here. This particular candle. At the formation of this candle, I'm entering a sell straight, and I see how far the price move. The price move a great, and then the price move about, that's 145 pips. 145 pips move. The price move 145 pip, and that is massive. Can you see? To the price now. Come to think of it, in the future, the price is resisted here, and the price came to this place now. In the same zone, I'm having a bullish engulfing candle here. See, this candle is completely engulfed by by a candle. I have a bullish engulfing candle now at this zone, which signifies buy. So if I've entered my buy from here, see how the price goes. In fact, it's also confirmed here by another bullish engulfing on the same zone. Bullish engulfing. This candle engulfed this previous candle. This candle engulfed this previous candle. And then see how massive. See how massive the price went. Look at it from here. Look at it. That is how many? That is 275 pips. 275 pips. And it's still moving. It's still moving. It's still moving. And it's still moving. Let's move further. Now I'm having this zone. See, I'm having a support here. Price got rejected here. Came here again. Did you see doji? Did you see doji in this place? This is common doji, or maybe it look like a long-legged doji. It's a doji. Price came there. I told you, I look for this candle to be formed, and I enter. At least I'll have won some pips. I'll have broken even before price turned back again. And if, of course, definitely my stop loss is going to be here. My stop loss is going to be here. Okay, that's so going to be here. So the price move up, and then it's still moving. So you can see I'm having doji here, and then I'm having a bullish engulfing here at the zone. At the end of this bullish engulfing zone, I'm going to be entering my trade. Pump, and then see how it went. The price came as far as 134 pips. 134 pips, and that's remarkable. That's remarkable. You can see my bullish engulfing here. You see, bullish engulfing here, mighty, so mighty. And then the third one, or the third example I want to show you, I'm even currently on this trade at the moment. I'm currently buying this setup at the moment, but come to look at it, price got here, got rejected. It forms a resistance here, and then the resistance came in the future and was, became a support. It became a support here. It forms a particular candle. This candle is called the piercing candle. We're going to be teaching that in the future. This candle is called piercing candle. It came again, form another piercing candle, and then all of a sudden it's giving me a bullish candle here. A bullish candle in this place. Look at multiple confirmation. We call it confluence. Here now, but it's giving me a bullish engulfing candle there, which is enough for me to enter a trade. It's enough for me to enter a trade. If I enter this trade at the close of this bullish engulfing candle, boom, I'm coming up, and that's over 117 pips. I'm telling you. But then if I've drawn my trend line too, the trend line is going to be giving me the point one, my point one. Okay, then I have my point two. I have my point two. I have my point two at this point. Then I have um then I have my point three. Then I have my area of interest, which is here. And look at the candle that was formed. This candle is massive. This candle is massive. If you call it pin bar, fine. You call it doji, it's also fine. See, but if this candle form now, I told you you can literally take your entry, some pips above that candle. But then I waited to, as you waited again, you are seeing a bullish engulfing candle again, bullish engulfing, which give you several confluent confirmations. My goodness. First of all, the 30 touch point, this candle is already formed, which that means is rejected. This price, this zone here, this down zone here is important. Are you hearing me now? And so price move to the upside. And then to confirm this now, I'm seeing a bullish engulfing candle. Boom, boom, and see price move massive to the upside. Reversal candle is very powerful. Please don't joke with it. Don't joke with any of those ones I've selected to teach you. This is the one for today. I'm going to continue until I exhaust my list of 20 reversal candles, and you need to just be familiar with them. That's why I'm taking them, one after the other, not rushing everything in a single training, or in a single class, and you have to, pay attention. And look at this in the future. Price got to this place, rejected, and it became a support here. Support, the resistance has turned support, the resistance has turned support, and then it came back there in the future. In the future, it's still touching my zone. All of a sudden, I have a bullish engulfing candle. Oh my goodness. I'm having a bullish engulfing candle. And then what do? Pew! I'm currently on this particular trade at the moment. I'm currently on this trade. I'm currently buying this signal. Okay. And then at this zone, just take your entry, enter your entry. Then you're still going to be on the trade. You're still going to be on the trade, and just rally and just enjoy it. So that is bullish and bearish engulfing. Don't forget to do your assignment. Show me 6 places where you find each of bullish engulfing candle and bearish engulfing candlesticks, and tell me what you're going to do. Are you buying? Are you selling? And then especially at the down zone.